Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, which is my passion. We have 21 SPY and ES mean reversion systems. They've been fairly quiet this year because of the market strong uptrend, but what have really kicked butt is our amazing KISS systems located in the systems area, KISS STS tables. They've been outstanding. You know, we finally got a rug pull in the market today. The S&P down about 79 points, 1.3%, while the NASDAQ was down 2.5%. So pretty nice pullback today. As far as the KISS systems, you know, they've been long this market. Today, the Dow had a new smart trailing stop. As you know, the Dow has been leading this recent advance along with the Russell. That said, AMD stopped out for about a 0.93% loss, and Microsoft also stopped out, but it managed to close out a 3.9% gain. Previous trade it made 4.8%. You can see here what's still long. Quite a bit of stuff still long. Some of the stuff is up fairly substantially, like Mara is up about 49%. Google's up 22%. Apple is up 21.8% on the system. Again, the Dow Jones is what's been moving lately. So as far as the KISS systems, remember we have all these various baskets, right? We have a BBT basket. We have the mega cap 10 tech stocks, things like Apple and Google, Meta, etc., that dominate the market. All the NASDAQ 100 stocks, all the S&P 500 stocks, over 100 ETFs, all the Dow Jones stocks. So you can see here all the Dow Jones stocks, what the system is doing. So Boeing, stuff like that, Cisco, Disney. It's been flat, all these, for quite a while. And these are the ones that had new smart trailing stops today. UNH, United Healthcare, has been rallying strongly. That's the biggest component of the Dow. That helped propel the Dow up to a new high today. You can see that trades up about 7.4%. Microsoft, again, is in the Dow. It stopped out for about a 3.9% gain. Johnson & Johnson and Dow went long today. Those are new entries on the KISS system. Remember, KISS systems give you that smart trailing stop, so you always have that exit, and it moves it up over time. Again, enough talk about that. Let's go and move back to this newsletter at hand. It is Wednesday, July 17th, and this is my very comprehensive video review of the markets, commodities, trading systems, etc. This is our backend recorder for our standard website subscription service, which if you're on YouTube, you should strongly consider subscribing so you can get access to all these systems instead of just seeing, 2 or 3 videos after the fact on YouTube. So I'm going to get this recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, July 17th newsletter. Tonight's newsletter divided into 5 major sections, same theme as we always keep. Anyway, as you know, market finally had a nice rug pull today. The S&P 500 lost 79 points or 1.4%. It's now down 0.5% for the week. The NASDAQ triple Q's lost 2.9%. That's a big one-day loss, guys. The NASDAQ has been, weaker lately. Money's been rotating out of there, so it's been ahead of the Dow, of the S&P. So that's a big loss for today, and it's down 2.6% for the week. The Russell lost 1%. All right, it's been very strong, but it pulled back today, but it's still up 4.3% for the week. So that and the Dow are outperforming quite a bit. The Dow actually gained 0.6% today, and it's up 3% for the week. UNH is the largest component of the Dow that helped propel it today and, of course, over the last several days. Again, by any means of the stretch, everyone knew the market was extremely overbought. Any day we could have a nice little pullback, rug pull. And today was besides OPEX this week, that's options expiration. Remember, that's on Friday, so we expect volatility. But the VIX options expire on Wednesday, in case you guys didn't know that. They don't expire on Friday, they expire on Wednesday. And many times you get big moves on VIX options expiration. All right, and we saw that today. The other thing that was really standing out, and this has got to be about a record. I didn't go and check all the past, but I don't think I've ever seen the NYMO and NAMO outside their upper Bollinger Bands for 4 consecutive days. That's what we had as the close of yesterday. I mean, again, I've seen 2 days, maybe 3. Usually it's 1 day. But that was pretty extreme, so not surprised to see that rug pull today. Anyway, they both came back inside their Bollinger Bands. And as far as the market here, guys, again, we're not looking for a major correction here. This is a pullback to work off the overbought nature. We think the S&P will at least test 6,000 later this year. As far as this pullback, I don't think it's done yet. I still think it's got a little bit more to go, a few days, etc. But we'll see. All right, let's go ahead and move on to the charts. So first image below, item number 2. So here's the charts of the NAMO. That's the McClellan oscillator for the NASDAQ, and I have the NASDAQ price up here. And here's the NYMO. That's the NYSE advanced decline, McClellan oscillator, and you have the NYSE here. But you can see, as of the close of yesterday, this had closed outside its upper Bollinger Bands 4 consecutive days. So that's pretty much a record, or at least for the last several years. So things were quite stretched. Everyone knew that, and finally got a little reprieve today. Next, image number 3. Here's a 30-minute chart of the S&P. Steve showed this last night. This ending diagonal, this wedge pattern, you can see the 5 waves, 1, 2, 3, 4, 5, along with MACD divergence. Again, whenever you see a pattern like that with 5 waves and divergence, you're due for a little rug pull, and we got that today with the S&P down about 79 points. Now, drawing fibs from the July lows, you can see price came down right to that 38% fib. To me, this looks like one wave down, essentially, right? A corrective move should at least be 3 waves. Again, corrective moves like wave 4s, they can do many different patterns. They could do a simple ABC zigzag. They could do a triangle, a coil, something more complex. But at minimum is a 3 wave. And so right now I see essentially 1 wave down. So maybe we get a little bounce tomorrow. But I think a bounce would be a lower high wave B. Then we come down again in a C. And maybe we target some of these lower fib areas like the 50% fib or 61.8% fib. Okay. Again, I'll get back to these later in the newsletter. Let's go and move on. So here's the KISS systems, the KISS STS systems for the BPT basket. So as you'd expect, a couple things stopped out today. AMD stopped out for about a 0.9% loss. No big deal. That's tiny loss. The last trade made 1.6%, wasn't that much, but it still made some money on that last trade. Microsoft also closed out. It hit its smart trailing stop. It managed to close out with a 3.9% gain. Again, not a big gain, but it's still a gain. And the last trade on the KISS system made 4.8%. The Dow had a new smart trailing stop, not surprising given how strong the Dow's been. So that smart trailing stop moved up from 391.80 to 440. So that's a nice jump there. And otherwise, you can see all what's still long here. Guys, next week we're having some of the big earnings stocks such as Meta and Google. So none of the big names are reporting this week. That's the other thing I forgot to mention. We are in earnings season, guys, so be aware of that. Check earnings for individual stocks that you may hold as trades. Next, item number 5. So here's the KISS tables again. But remember, we have all these baskets. So I just showed you the BPT basket. So here's the Dow basket. So that contains all the Dow 30 stocks. So you can see how the KISS system trades all the Dow 30 stocks. All right, and you can see quite a few of them had new smart trailing stops today, such as UNH, which has been on fire. That trades up 7.438%. The last trade lost about 0.5%. Again, kept that loss small. This one's up nicely. Microsoft, of course, stopped out today. You can see what's on the list here. There's a handful of Dow stocks that are flat, such as Disney and Boeing, etc. Not surprising. The KISS system is long. It catches up trends when things are downtrending, like Boeing and Disney, stuff like that. They're not going to be long. All right, let's go and move back to the general market newsletter. Item number 6 shows the index sector table, what transpired today and for the week. Again, look at that. Look at these moves today. 1.39% down for the S&P, down 0.5% for the week. NASDAQ down 2.8%. That's a big day, guys. NASDAQ 100 down 2.9%. They're all down 2.5% for the week. Russell 2000 was down 1% today. That's been on fire lately, but it's still up 4.3% today for the week, I mean. And the Dow was up today, largely due to United Healthcare, which is the largest component, had a big day. And it's up 3% for the week. Did you know money rotated recently out of some of the tech sector into some of these areas like the small caps and the Dow? As far as the market sectors here, most were down today. There's a few green here though. Energy, consumer staples, real estate, healthcare, utilities, banks, financials. For the week, most of the sectors are up. Weakness, of course, is technology. Look at the technology here. Tech is down 4%. Semiconductors are down 6.35%. Okay. What's the strongest this week? Banks up 5.4%. Transports up 3.5%. Financials up 3.4%. Oil services up 5.2%. Okay. Currencies, US dollar taken to the woodshed, down about 0.5% today. Crypto is down a little bit, still up for the week, of course. Commodities, a lot of red here. The index itself, the DBC, was pretty flat, as you can see. It's down 1% for the week, though. Crude oil down 1.4%. Sorry about that, guys. I had to refresh this table. We had old data. So, again, DBC index was basically flat today. Crude oil was up 0.84%. I thought it was up. That's why I refreshed it. And natural gas continues to be absolutely taken to the woodshed. They call it the widowmaker for good reason. Down 7% today. It's down 12.6% for the week. It's got to be getting quite oversold here, but you got to be careful with that one, guys. Copper down about 1%. Uranium down 4.4%. DBA down. Little strength in corn and wheat. But again, a lot of the commodities were down quite a bit here. Precious metals all down today despite the dollar selling off. That area we think is vulnerable. So you can see silver is leading to the downside here a little bit, and the stocks are leading here a bit. They're still up for the week though. And as far as the bond market, 10-year, 30-year Treasury yields were slightly down today. Next, item number 7 shows the economic news calendar. Again, tomorrow is the 18th. That is Thursday. We have initial jobless claims, Philly Fed, natural gas inventories, and of course, any particular earnings, etc. All right, moving on. Talking about earnings season, guys, because we are in earnings season. So make sure to check individual stocks that you may be trading, because you can always get a nasty surprise in earnings. But some of the big cap tech stocks, none of them are reporting this week. There's a couple reporting next week. So Meta, for example, reports on July 25th, and you can see it's been selling off for the last couple weeks already. So it's been quite weak. Maybe this will get a bounce soon, previous to earnings. So there's actually a little demand zone right here. So you may want to look at an intraday chart, see if you can get a trigger. And chart number 9, here's Google. Earnings are next week on the 23rd. It's also been pulling back here from that recent high. 50-day moving average is below. Next, let's go and move back to the major indexes. So this chart shows you the 5 key major indexes. Again, you can see that weakness here on the NASDAQ and, of course, on the S&P today, finally pulling back. But the NASDAQ started pulling back over a week ago. So it's been leading down. It started selling off first. Now we'll see where it finds support. Lower Bollinger Bands would be one support area. The Dow, of course, has just been super strong even today. And you can see the Russell finally pulled back today, but, it's had a hell of a move recently. Remember, a few weeks ago I said the Russell would likely pay catch up to the general market as well as the Dow, and that's what's happened. So if you switch some of your money out of tech into those areas, you've done well. Next, chart 11, here's the Dow Jones. Again, you can see had this beautiful coil pattern, broke out early last week, and it just continues this momentum uptrend. So the nice thing is we've seen nice sector rotation in the markets. So it's all been tech dominated this year, but we have seen some of that money come out and go into these other sectors. And these were pretty easy trades, guys, because they were due to play some catch up. So nice trade if you caught that. Chart number 12, here's UNH, United Healthcare. You can see how this thing has just been ramping up. It's up 4.5% today. That's a big move for this stock. This is the largest component of the Dow. It represents about it's around 8.5% of the Dow. Remember, the KISS system's been long this. Went long a few days ago, so it's been riding this uptrend nicely. Next, chart number 13, here's Caterpillar. That's also in the Dow. I showed this the other day as a trade idea. Nice rally out of that base into this initial supply zone. But that's another component that has helped the Dow Jones recently. Next, chart number 14, here's IWM small caps. Again, they had a beautiful coil pattern. Remember this 5-wave pattern? We've had this marked for months. Remember, we've been stating we are looking for that thrust up in that wave 5. And it finally happened. Started last week on the breakaway gap from this coil. Guys, whenever you have I know sometimes it's difficult mentally to buy a gap up, but whenever you have a gap like this and it gaps above a obvious resistance trend line, that is what you call a breakaway gap. Those are gaps that don't fill. They don't fill right away. They may fill months later. But those are gaps you can chase, okay? So that was, obviously it was better to buy inside the coil pattern or in this demand zone several weeks ago. But you could have bought that breakaway gap on this coil and had a hell of a trade. Now today it was up again, then it pulled back. But we were looking for this wave 5, and that unfolded nicely. Chart number 15, here's a 2-hour review. You can see that tiny coil. So fractal, you had a smaller coil on the smaller time frame. Hell of a move. Quite wide moving average ribbons. Not surprised to see a pullback. There's no MACD divergence here. So to me, this looks like a wave 3. Maybe it has a wave 4 consolidation. Then it goes up again in a 5, would be my guess. Chart number 16, here's a weekly view of IWM. Remember, broke out of this coil last week. So got up into this supply zone. Pulled back from the top of that supply zone for now. Next, chart number 17, here's the equal weighted S&P. Remember, this group is also started coming to life last week. Had a beautiful coil setup. RSP is the tradable ETF. There's a couple others as well, but these are all great trades, guys. If you rotated into the small caps, the Dow, or the equal weighted, you've done well over the last week. Next, chart number 18, here's the S&P 500. Now, this is the weekly chart, which is down about 0.5% now. Remember, we still technically have this MACD divergence here. We've had one hell of a run in the S&P this year. Next, chart number 19, here's the daily KISS trend system. This is the custom version, not the one on the website. The one on the website actually has a much tighter smart trailing stop. It's up around 5,500. But anyway, take a look at these charts. We have a lot of different things here. We have the ATR. We have also a weekly ATR. That's what this is. This is actually the weekly ATR. And you can see how price found support of the weekly ATR in April there. So it's nice to see where it is. You can see it's way down here at 53.20 essentially. But anyway, guys, look how everything lined up for a pullback. You had a DeMark 913 combo, and you can see over the last several months, all these 913 combos led to pullbacks. See that? So not surprised to see a pullback here. First support's that ATR. Okay. If we lose that, then you have the 50-day moving average and then your weekly ATR. But again, everything was lined up here. You also had the super wide moving average ribbon. Remember I said when it gets too wide, that tends to get pullbacks. And when it's pinching, that's your good buying opportunities. Chart number 20, here's the 4 time frames. There's the daily up here, which I just discussed, that ATR there. Here's the half day. We're still holding the ATR for now. We're really close to it. And of course, we're broke the ATR on the smaller time frames. Next, chart number 21, here's a daily view of the S&P. Again, we had that little RSI 5 divergence, remember, at the recent highs. This just shows a nice clean channel. We're pulling back from that upper channel area. Closed a little below that 9 EMA today. So losing that 9 EMA sets the door for at least the 20-day here. Then you have your uptrend line and then your 50-day moving average. Chart number 22, here's another view of the S&P. This shows the connecting trend line here, which we stalled at, pulling back here. This boxed area is a demand zone, so if we get down into there, I think that'll attract buying. It'd be a good area to take another long, because again, I view this as some sort of fourth wave. Chart number 23. Haven't shown this chart for a while. This is this system chart. It's a mechanical system chart. I know quite a bit of you guys really liked this chart when I showed this early part of the year. So this focuses on the 60 link stochastics for the S&P. All right. So again, most of you are aware of stochastics. They're either 14 or 10, stuff like that, and they tend to oscillate fairly quickly. When you make it a 60 length, it will generally, on strong uptrends, it'll trend and stay above 80% for long periods of time, like you're seeing here. And when it does that, use these faster oscillators, like a 2-length RSI, a 5-length Williams percent, a 5-length or a 4-length fast stochastic. Whenever these oscillators get oversold, while at the same time the 60 stochastic is remaining embedded above 80%, these give you nice mean reversion buy trades. Long signals. You can see all these nice long signals that occurred from December all the way into late March. All these gave great trades. And you can see the 60 stochastic, of course, went below 80% there in April during that correction. Came back above it in May, and it stayed above it. So you can see since that time, we've actually had 4 or 5 signals. Okay, those last 4 trades were nice winning trades. Today, all 3 of those fast oscillators are getting oversold, so that signals another entry while this stochastic remains above 80. Now, that doesn't mean we go right up from here, guys. I don't think this correction is done yet. So, this could pull back more. Sometimes these are early, like look at the one in May there when they first got oversold. It occurred right here. You didn't get much of a bounce, and then they got oversold again at that second better bottom there. So maybe you see something like that. But pretty cool chart, nice simple mechanical system, very easy to understand. Chart number 24, here's another chart I posted yesterday. This is the SPY, and here I'm focusing on the ADX indicator with the plus and minus DIs. So interesting thing, I use this for one of my breakout systems, mean reversion systems. But the ADX, whenever you see this expansion, you see how it's like when the ADX gets really wide, and then the negative DI it's almost like a sideways V. Whenever you see that, that's the epitome of strength. You're in a strong wave 3. And notice back, that occurred, late last year in the fall. And then you could see ADX got way up here in the 50s. But your sell signal could have been when this ADX finally fell below the negative DI, or the negative DI went above ADX or whatever. That would have got you out here. But look here, you got to have a somewhat similar view where the ADX had a big expansion up to 50. And this is now pulling back, but now we want to watch these. But this doesn't look done yet. So for this to have a sell signal like it did here, you'd have to have this DI go above the ADX, which is way up here. But so this suggests that this trend is far from over, but this initial correction here probably has at least a few more days to go. Chart number 25, here's another chart. This shows you some various cycles. All right. Again, take these with a grain of salt, but they're kind of interesting. You have a bigger cycle, you have a smaller cycle, and anyway, they've been lining up fairly well here. If these were to line up, they could suggest maybe a trade top sometime in early August, mid-August, something like that. We'll see if that ends up playing out or not. And maybe some sort of major inflection in November. Next. Chart number 26, here's the 30-minute chart of the S&P, the first chart I showed. Remember, last night Steve showed the S&P as a rising wedge ending diagonal, 5 waves, MACD divergence. Everything was set up there, and this started off with a gap down today. So that's a nice completed pattern. That said, we only have a really major one wave here. corrections are usually at least 3 waves. So to me, that's why I don't think this correction's done. Maybe we get a little bounce here as a wave B, lower high, then maybe another move down. This could be one target area we're looking at. Chart number 27, here's a 2-hour chart. Again, you can see that wedge. You can see that here I illustrated the potential A, B, C. Here's a small demand zone down in this range. Of course, there's a much larger support down here. That's if we have a deeper pullback, but right now these areas could be an initial support. Chart number 28, here's a 60-minute chart. So we've pulled back all the way to this channel. Again, nice divergence there at the highs. We'll see if we bounce off this channel. This is support. Chart number 29, here's the triple Qs, KISS system. Again, the Qs have been leading down lately. Again, perfect to mark 9 last week, marked that high just like it did the last time. We lost the ATR support on the Q, so you can see how they're weaker than the S&P, which are still above their ATR. As you can see, S&P still way above its ATR, while the triple Qs have strongly lost their ATR. Now you have the 50-day moving average below that, and of course the weekly ATR. Chart number 30, here's the 4 time frames, and I talked about this to Steve last night. You had a end of bull cycle on the half-day chart. You had broken support, so to me, along with that DeMark 13 there, you had a pretty good top here. That after a lower high wave B, and now it's playing out. You could see how we had tested the underside of the ATR in the 130-minute, became resistance, a couple days ago, as well as the 78-minute. So the NASDAQ really looked vulnerable, and that's been playing out. Chart number 31, here's SQQ. That's the triple inverse ETF for the NASDAQ. I put this out yesterday as a trade. You had a tight coil here on this 60-minute chart. Congrats if you bought it. Had a nice move today, up 8.7%. Was a nice trade. Chart number 32, here's the NASDAQ daily. Again, you can see that top over a week ago. We bounced up into that area. Steve calls it a cloud area. It's a little resistance. Dumped. Big bearish engulfing candle today. 50-day moving average is quite a bit below. We'll see where this ends up finding support, but there's a little. We'll see if it ends up making it down to the 50-day moving average or this gap or not over time. Chart number 33, here's the 2-hour view. Again, you get this wedge pattern, and this is here you have ABC. So since the Qs have been leading down, they've been weaker. Remember, the S&P really only has 1 wave down. So right now the Qs have at least 3 waves down. So I think we'll probably see the Qs bottom before the S&P. We'll probably see some money start to rotate back into the tech soon. So I think we're going to see the Qs bottom sometime soon. But anyway, 38% fib approaching. That's one area to watch. Chart number 34, here's a 2-hour view. You can see the coil we broke down from. Here's an uptrend line from the May lows. Could be a target area as well. Of course, you have that open gap below. Chart number 35, here's a 2-hour view. Again, shows you that 3-wave ABC. We're into one demand zone area. We'll see if we can bounce from there or not. And chart number 30, here's a 30-minute chart also showing the same thing, that 3-wave and a little demand zone. All right, so that does it for the major indexes, guys. Futures are up a little bit this evening. Again, we'll see where they fare tomorrow. ES futures are up about 15 points. Moving on, chart number 37, here's the VIX. Remember, we had the options expiration on the VIX today, and we had the volatility. Now, the VIX closed outside its upper Bollinger Bands. We want to watch this, guys, because whenever the VIX closes back inside the Bollinger Bands, that is a good buy signal. It's called the VIX Bollinger Band S&P buy signal. So we're going to watch that. VIX had been finding support for the last couple months down here. It had been building a base. Now, if this wants to run up for a bit, that would, of course, keep this correction going a little bit. The other notable is the VVIX to VIX ratio closed below its lower Bollinger Bands. I point that out because sometimes this occurs near pretty good inflections. So that's another thing to point out. Next, chart 38. Here's the 10-year Treasury yield. Down about 1% this week. Leaking oil here a little bit. Slight breach of this weekly coil. Not a big break. It could obviously reverse. We want to keep an eye on that. A break of this, a breakdown here on the rates, would help propel the market for that next wave 5 up. Chart 39, here's the daily. Again, continues downward. It's now testing the 61.8 fib retracement. Still in the downtrend channel. Chart 40, here's TLT 20-year bonds daily, testing a little resistance area here. We'll see if it can break above that. Chart 41, here's the weekly. The weekly is really interesting on TLT. In fact, you could look at this as a trade idea, guys. Nice, clean weekly coil. For a break of this, you could go long TLT. That would help the market. Chart 42, here's the yield curve. I meant to remove this. I discussed this on Monday. It is at 0.94, guys, so this has moved up a little bit. Eventually, when this goes back positive, that's when we'll have our recession. This is the second longest in history it's been inverted. The longest was in the 1920s. Chart 43, here's high yield corporate with S&P. You know, they tend to be highly correlated. High yield corporate held up today while the S&P was weaker. And there's the weekly version of the S&P and high yield corporate. You can see how strongly these two are correlated. Moving on to the market sectors, here's XLK technology, where the weakness has been. Again, we had a nice divergent high, MACD divergence, RSI divergence. So getting a nice rug pull. Here there's an open gap on XLK, and you have the 50-day moving average, so maybe that's a little target in the short term. We'll see if we find some support there. Sectors that have been super strong are financials. Here's the XLF. Remember, we've been showing this coil. Started breaking out last week. You could have bought this. Nice, easy ETF to buy. Great trade. Chart 47, XLP Consumer Staples. I showed this on Monday. Ascending triangle. Broke out today. Again, you could have bought this, guys. Chart 48, Biotech has also been strong with small caps. Pulling back a little bit today from that recent high. Not surprised. But it could have a little cup and handle look there. Chart 49, transports have had a big move as well, but pulled off this supply zone for now. Chart 50, here's industrials, have also been strong lately after breaking out of that triangle pattern last week. A little pullback today inside yesterday's candle. Chart 51, real estate. This area's been super strong. If those rates start pulling back more, that'll help real estate even more. Chart 52, energy. Remember, this area's had a nice move. Broke out of that channel, moving up off the highs today, but moving up. Buying that 200-day moving average the other day was a great trade. Chart 53, oil services. Also a nice pop recently. I love the weekly chart. Here's the weekly chart of oil services. You have a big weekly coil pattern here. I think this sucker eventually breaks out. So I own a little swing position in this. And here's a zoomed out view of oil services, weekly chart going back to 2017. Again, you can see it's been overall uptrending since 2020. But if it can get through this area, you got a big thin zone. We could see oil services melt up to the 420 area. That would be a very good percentage of move. By the way, there's a video I posted the other day, Kevin O'Leary. He talked about his group, since they think Trump's going to win, that they've made a big bet in energy. And if Trump does get in there, I think that makes sense. So it's just something to consider. Moving on to commodities, chart 56, DBC. This is the weekly chart, down about 1% for the week. Remember, a couple weeks ago, stalled at that upper coil trend line. Overall, the bigger coil, I imagine this will break out of this sometime later this year. Chart 57, here's crude oil. Bounced today off the 50-day moving average. It's in a big, otherwise you got a big coil here. You can see that on the weekly chart, which you can see right here. Here's the weekly. You can see the big coil setting up. Chart 59, UNG, natural gas ETF, the Widowmaker. You can see why they call it. Stalled at the 200-day moving average there in May and June, and it's just been pummeled. I actually tried to buy some a few days ago, and I got stopped out. You got to be extremely careful with this thing. It's now back to the lows here. It is getting oversold here, but be careful with this sucker, guys. Charber 60, here's copper. So copper, as you can see, rallied up recently, tested that previous area, which became resistance. Pulling back. Charber 61, DBA, also been pulling back off those 50 and 20-day moving averages. This is your demand zone, which has been holding for a while. And moving on, Charber 62, here's Bitcoin. Remember, last week bounced off that lower trend line of this pattern. Still, right now it's in the middle of the pattern. And here's the weekly chart. Honestly, to me, I can see a wave 3, a wave ABC is a wave 4. I think that's likely completed. If so, I think we'll see Bitcoin rally up to a new all-time high in a wave 5. Charber 64, Ethereum, also has bounced a little bit this week. Still holding this trend line now. Some of the other crypto stocks that we've had, they all pulled back today, but they gave great trades earlier in the week, like Hut here, cup and handle pattern, gave a great trade from last week into yesterday. Merit as well was up nicely on Monday and Tuesday, gave a little profits back today. And Charber 67, Riot, same deal. Hell of a move the last few days, little pullback today. Looking at the currencies, here's US dollar. Big move down today, a little bounce here in the after hours. Charber 69, here's the weekly. We still have this coil-like pattern. Charber 70, here's the euro. To me, the euro looks like an ascending triangle on the weekly. If this breaks out, the dollar will eventually break down. And the one area I've been talking about is the Japanese yen. Remember I said I went long this. To me, it's a contrarian. It's so oversold. If the dollar pulls back, I think we'll see the yen go up. You can see it's went up here the last couple weeks now. Charber 72, here's the monthly view. I love this monthly wedge here. You got MACD divergence on the wedge, RSI divergence. Just looks good. I got to stop at the lows. Okay. Possible if this is at the lows, I got a pretty good swing trade. We'll see. Moving on, precious metals, Charber 73, gold, finally pulling back. Here I added a demand zone. So you got a demand zone down in here now. Gold, of course, is in a bull market. Charber 74, here's the weekly chart. Now, gold did make a new high at almost 2,500. You do have an RSI and MACD divergence setting up now. Okay. Now, again, I don't expect that to end the bull market. If we get a correction here in precious metals soon, I expect it to be some sort of deeper wave 4. Okay. I expect gold to eventually go up to 3,000. Charber 75, here's silver. Now that's been weaker lately. Nice pullback. Still holding that 50 and 20-day moving averages, but if it loses these guys, then I expect a deeper pullback. Charber 76, there's the weekly. Charber 77, here's GDX. Big rally yesterday, nice pullback today inside yesterday's coil. Stocks underperformed the metal a little bit, as you can see. Charber 78, here's the weekly view. Again, once gold does put in a confirmed high, GDX puts it in a confirmed high, we're looking at this as a wave 5. Then we're looking at some sort of deeper ABC correction. Charber 79, here's the 60-minute view. Steve showed warning signs on the 60-minute via the MACD divergence, etc. And you can see a little nice pullback today. The other thing I've been pointing out is the BPGDM. You know, we got a buy signal on March 1st. That was the time to load up on the mining stocks, guys. And gold as well. Gold and silver. But now this sucker's up here at 89%. Remember, these bullish percent charts only go to 100%. So it's getting, this is the overbought territory. You'll have a big MACD divergence set up. So to me, I said that recent rally in GDX probably would not go that far because we're in the overbought territory. Looking at some of those trade ideas, they all gave some profits back today. Here's CDE. Again, great trade though if you bought this 2 weeks ago in that coil break, but giving a little bit back today. Here's Newmont, gave a little bit back, but it's been a heck of a trade from that tight coil break from a couple weeks ago. Same for EXK, really nice move out of that pattern, little pullback today. The final part of the newsletter, I know it's getting late here. Here's STVN, heck of a swing trade from a couple weeks ago. Remember my initial stop was there. I'm out of this one just because I got enough positions to manage, but it's been a nice trade. Looking at NVIDIA, that's been pulling back. Guys, my plan is playing out. Remember that recent rally? Remember, I favored that as a wave B lower high. I ended up being correct. So this looks like we're in a wave C. Maybe it finds support at the 50-day moving average or this demand zone. I think this will be a good buy area, but that lower high, I was looking for that. And Charber 86, NVDD. Remember, I've had this. That's the inverse ETF for NVIDIA. Look at this nice base. And NVDS is the 1.2 time inverse ETF. Charber 88 Ford was actually up today. This is a long idea of ours from 3 weeks ago on this coil break. One hell of a swing. Rivian has also been a heck of a swing out of the inverse head and shoulder pattern. Little pullback today. Charber 90 AMD, absolute smash, down 10.2% today. This is a nice trade out of this channel a few weeks back, but hopefully you sold that supply zone. Okay, always look to take profits at those supply zones. You can see it paused there and then it just cratered. Ugly. Earnings is July 13th, by the way. Charber 91. Here is Tesla, also working on this potential 3-wave. We'll see if this ends up being a wave C or not. Charber 92, here's the inverse Tesla ETF, TSDD. It initially gave us a nice quick trade to the 9 EMA. Retest the lows. I said I thought it might try again, and you can see it's trying to bounce here. I own a little bit of this one. Here's the 60-minute chart. Some of these dividend plays, OXLC, remember this one had the ex-dividend today. So as long as you own this coming into the day, you get that nice dividend. Pays about a 19% annual dividend, and it pays monthly. By the way, today's dividend, 90 cents, guys, on a $5.50 stock. That's a heck of a nice dividend. Charber 95, AMZA, another one. This one pays a 13% annual dividend. This should be coming up here next week sometime. Charber 96, UTG. This one has the ex-dividend date on the 19th. Still looks pretty good. Some other stuff. Here's American Airlines. Here's a potential long idea to monitor. You got some MACD divergence. This trend line over 1124 would be a trigger. Charber 98, PACB, little biotech stock. Nice base, low price stock. Big volume move yesterday. Watching for this maybe to rally up at least to that next resistance area, fill that gap. Charber 99, YY, I've had it on the list as a flag. Today it tested that trend line and pulled back. There's a big offer on level 2 I've been looking at around 35. So I kept it on the list here for now. Charber 100, good. Here's a new one. Kind of a cup and handle. Nice volume today. Charber 101, QD. Here's another new one. Nice low price stock. Testing the resistance area. We'll see if this sucker can pop through here or not. Anyway, guys, that does it. Have a wonderful evening. Take care. Thanks for all your support. And if you're on YouTube, please like, subscribe, comment. That helps us out. And please consider subscribing to our channel. You could also check out our Facebook page, our Twitter. I'm trying to be a little more active there. But anyway, that does it. We'll see what happens tomorrow and the rest of the week, guys. Take care.